everyone, today we are here to revise depending concepts in modern business environment, chapter 2 of SCMPE. We'll first begin with total quality management. Total quality management, TQM, is a management strategy aimed at embedding awareness of quality in all organizational processes. Here we have to remind that quality is a choice and not a compulsion. But once we have selected a particular quality level, then we have to be committed in achieving the particular quality level. This requires ensuring that things are done right at the first time and that the defects and waste are eliminated from operation. A simple tagline could be what? Doing things right at the first time. Doing things right at the first time. Even it could be simplified as doing things right. Doing right things at the right time. Doing right things at the right time. It is a comprehensive management system which focuses on customer needs, providing quality service at reasonable cost, continuous improvement. It recognizes the role of everyone, views organization as an internal system with common aim, focus on the way tasks are accomplished, and emphasizes teamwork. Emphasis teamwork. And then we are moving to the concept of 6 C's in TQM. What are the 6? These are the 6 things which are very important in TQM. 1 is the commitment. I have to be committed. If I'm taking a particular quality level, then I have to be committed in achieving it. Then the culture. See, I cannot impose everything on my employees, but I have to give a reasonable responsibility to them. This is a culture. Continuous improvement. I have to find ways to continue to improve myself. Cooperation. Only employees doing the work without top management cooperation or top management imposing the principles without employees cooperation is not going to work, right? So that is why there is a need for cooperation. Customer focus, we have seen, right? First itself it is focused on customers' need by providing quality services at reasonable cost. And control, I have to keep a control over the cost because the entire thing which I am going is based on the cost. Right. So let's repeat the 6 C's. Commitment, culture, continuous improvement, cooperation, customer focus, and control. Commitment, culture, continuous improvement, cooperation, customer focus, and control. Then we are then moving on to the plan, do, check, and act cycle. This is known as PDCA. What does plan mean? It means I have to establish the objectives and develop the action plans. Do will mean I'm implementing what I have planned. Okay, and then check. I have to check whether I'm doing it right. So I have to measure my performance and then act. If I'm doing something wrong, I have to take corrective action. See, just generally what happens? We plan. I put a weekly plan for my studies, right? So I put a plan. That is a plan. Do, I'm going to study daily, okay? And then I'll check. I'll send evening, I'll just check whether I have achieved what I have planned. If I have achieved, then it's fine. If I'm not, I have to take corrective action. Just how we do our studies cycle. That's how this has been planned. This is known as plan, do, check, and act cycle. This is basically for continuous improvement. Just putting a plan without checking into it again is utter waste, right? Now, Deming has outlined his philosophy on quality in his famous 14 points. These points are principles that help guide companies in achieving quality improvement. What are the criticism against total quality management? It focuses on documentation. It focuses on, see, whenever there is some advantage, there will be some criticism. Okay, without criticism, there is no life. Right? So, yeah. Focus on documentation. It emphasizes on quality assurance rather than improvement. It has internal focus and then it may not be appropriate for service-based industry. Then we are moving on to business excellence model. It is a philosophy for developing and strengthening the management systems and process of an organization to improve performance and create value to the stakeholders. The most common includes, what are the business excellence models? We have EFQM excellence models. We have Baldrige criteria for performance excellence, Singapore BE framework, Japan quality award model, and Australian business excellence framework. This framework names you have to remember. Okay, even though you are not remembering, if you could remember 1 or 2 points from each framework, it's well and good. At least, bare minimum, you have to remember this business excellence model frameworks, because if at all a question comes in business excellence model, if you could write these names, the examiner will understand that at least you have read something. Instead of writing your own cooked stories, it's better to write this keywords. Okay, whenever you write SCMPE paper, it is very important you highlight the keywords. Okay, whichever words you are trying to replicate from the ISM, you have to mention. See, sort of theory of constraints, you are writing as something. It focuses on revenue and cost management. Instead of writing it, you are just writing as profit. It's very waste, right? So you have to write as revenue and cost, and you have to underline the revenue and cost. Don't switch pens. No, whatever pen you are writing, it's fine that you underline with the same pen. Okay. and don't wait that you will complete the paper and then come back and underline with your pencil. It's not going to happen. In SCMPE paper, it's all about time. Okay, time management is the key in SCMPE paper success. Okay, now let's move on. Business excellence model and organizational culture. Business excellence approach focus on strengthening the internal function and communication, looks towards the cultivation of strong ties with the customers and can be incorporated into the culture. Excellence cannot be attained if the staffs are forced to conform certain norms. See, in schools also we will be forced to write some test. Okay, that test will not be performing well, but sometimes they give a good amount of time to prepare, and then they keep test. That test will be preparing fine because we are not forced into something, but there needs to be some force, but not, it should not be thrust upon you. Okay, then let's move on. Yeah, theory of constraint. Theory of constraint focus on revenue and cost. See, it's basically I'm going to focus on the constraints, nothing but the bottlenecks here. Here you cannot write as those activities which are troubling us. You have to write as bottlenecks. Okay, that is known as bottlenecks. Okay, there are things we have to remember. It advocates the use of three key measures. There are three key measures of theory of constraint. What are those? Throughput, investment, and operating expenses. Throughput, it means the rate of generating money in an organization through sales. See, nothing but I'm going to take my sales, okay, income, say 100 rupees, let the variable cost 50 rupees, the 50 is the my profit, right, my contribution, right. Within that I will divide by time, number of time that I'm going to take. Say assume I am taking 15 minutes, 50 minutes, so per minute I'm earning rupees 1. That will be known as throughput. Okay, direct labor cost is viewed as fixed unit level expense and is not usually not included. This is a key point here. Investment is nothing but those all assets will be known as investment. Simple. Okay, then operating expenses, money spent in turning the investment into throughput will be known as operating expenses. It includes the direct labor and all other operating, repairs and maintenance expenses. Based on these three measures, the objective of the management is increasing throughput, increasing the contribution, that is increasing the contribution per bottleneck activity, increasing the contribution per bottleneck activity, minimizing the investment and decreasing the operation expenses. Then here, see, this could be, you can write this, because instead of writing all the words, you can put it as flow chart and then you can move on. That reduces the time, that consumes less time, right? So that's why I basically tell you, whenever you write performance prism or it be a building block model, you first draw the diagram. Okay, first draw the flow chart, because once if you don't have time also, it's done, you have covered all the points in that flow chart. Okay, operational measures, throughput, investment and operating expenses. Throughput here would mean the incoming money. It increases, you have to increase the incoming money, right? Anybody in a business wants to increase their contribution, right? So increase the throughput. Investment, it's just, the money is just tied up, I will not be able to use the money, right? So that should be very minimal. And then operating expense anyways have to decrease the expenses. Then we have Goldratt's 5-step method of improving the performance. If somebody feels this video has speed, okay, it's because I'm just viewing it as for your last year revision. If you could spend 20 minutes in each chapter, it is very much easy, right? So you could say, assume you take, you have 10 hours, okay, you have 10 chapters. So if you could see my video in 20 minutes, see, I'm not focusing you to see my video in the last day, but if you could see it and then you just feel that, oh, I'm comfortable with all this chapters, all the concepts are there, and then you could solve the sums. It's very much easy, right? Your preparation time is very much less now, instead of studying all the theory earlier. That's why I'm going a bit speed. Okay, this is basically focused to the last revision. Okay, Goldratt's 5-step method for improving the performance. See, there's a 5-step. Whenever I have to manage the bottleneck activity, these are the 5 steps I have to follow. First, I have to identify what is the constraint, where I am, which is troubling me. I have to identify the bottleneck. Then I have to exploit. I have to try what are the ways I could reduce the constraint, subordinate and synchronize the constraint, elevate the performance of the constraint, and repeat the process. I have to repeat in such a manner when the constraint's contribution will be so high. Okay. Then throughput accounting. This is a ratio which is being frequently asked. Okay, throughput accounting ratio. Throughput per bottleneck minute divided by factory cost per unit. Throughput per bottleneck minute divided by factory cost per unit. If it is greater than 1, the product is profitable, and if it is less than 1, it is lost. Okay. Other performance measure could be, instead of factory cost, I could use labor cost or material cost itself. Then Now we are moving on to supply chain management. Here we have two. Okay, let's first understand the definition of supply chain management. It is the integration of key business process from end user through the original suppliers that provides product, service and information that add value for customers and other stakeholders. I have two types of supply chain. One could be pull based, another one would be push based. Push based general FMCG products, which we have biscuits and other stuffs, right? Biscuits, chips. Like, see, we are of same age, right? So that's why I'm thinking about fast food. Okay, so you can take some other good examples even. Okay, pull based, it's like Audi car or Royal Enfield, where I have to order and then I will get. Only when customers order, the supplier will make it ready and there will be a lead time for it. Okay, but generally the push model doesn't have a lead time. Okay, the lead time here I would mean that the customer places an order and gets it delivered. Okay, this time alone I'm telling. Okay, not from the first time. Okay, this customer lead time is very much minimal in the case of push model, but it's very much higher in the case of pull model. Okay, push model here, the supplier, he will supply the forecast, is production based on the forecast, inventory based on the forecast, stock based on forecast, and purchase what is available. But pull model, supplier to order, produce to order, automatically replenish warehouse, automatically replenish stock, and customer orders. Upstream flow and downstream flow. When the flow relates to supplier, it is known as upstream flow. I am going to interact something with my supplier, that will be known as upstream flow. When I am going to interact with my customer, that will be known as downstream flow. Simple, right? Then, management use of upstream supply chain. Upstream supply chain management. Relationship with the supplier and use of information technology. Relationship with the supplier and use of information technology. Here, use of information technology here would mean, this is also there in the case study I just. You could check the question also if you want. Okay, I would suggest it, but it's up to you. I may not force you, right? So, use of information technology. There is a e-sourcing, e-purchasing and e-payment. Here, relationship supplier, I have to check whether he is capable of innovation, quality, reliability, whether he is able to increase value for me. And then use of information technology is basically for e-procurement process, which involves e-sourcing, e-purchasing and e-payment. Downstream supply chain, any relationship with my any stream of supply between my customers and downstream supply chain management. Here I have four different things. One would be relationship marketing, customer relationship management, use of information technology and brand strategy. Here 6 markets model, and then customer relationship management would involve analysis of customer behavior, customer account profitability, customer lifetime value, customer selection, acquisition, retention and extension. Relationship marketing. Marketing plays a vital role to successfully handle the downstream supply chain management. 6 market model. What are the 6 markets? I have 6 markets. What are the 6 markets? Internal market, external market. What is known as internal market? Consumer market is known as external market, supplier market, referral market, influence market and recruitment market. Internal, consumer, referral, influence, recruitment and supplier. Okay, the basic, what is the objective of this market? It is to customer retention. Customer retention is the only objective of the markets. Customer retention is the only objective of the 6 markets. Okay. Now, customer relationship management. Customer relationship management. To manage and analyze customers' interaction and data through the life cycle with the main motive of improving the business relation, the strategies and technology used as customer relationship management. So I'm going to build a good relationship with my customer, that is known as customer relationship management, and then I'm going to analyze their behavior. I'm going to analyze their behavior I'm going to do first analysis based on geographical location and then based on their behavior. Customer account profitability. First, I will take the customer base and split into segments, okay, and then I will calculate the annual revenue which I am going to earn and what is the annual cost, and then I will check what is the profit, and those profitable customers I will identify and retain them and re-engineer those which are unprofitable. Re-engineer those which are unprofitable. What does re-engineer here means? I will call for a meeting and rediscuss that term. I will revamp the terms. Maybe I would be giving them huge discounts. I will tell them you are not giving me adequate profits, so I am going to reduce the discounts. Something like that. Customer lifetime value. Customer lifetime value is the present value of the net profit that we derive from a customer over the entire lifetime of a relationship. It is the net present value of the projected future cash outflows from a lifetime of a customer relationship. From a lifetime of a customer relationship. See, nothing but till his lifetime is going to buy from me. What is the net present value now? What is the net profit? That is present value of net profit. Present value of net profit. Okay, so with this I will be able to know who is all one-time customers. So for them I will charge the proper price. For regular customers I could give them some discounts so that I could have them, right? And then I have 4 different strategies. One would be the customer selection. So I will first select. See, for example, we will take the Apple. Here, Apple will be selecting only the even we can take Lamborghini or something like that, Audi. They are not putting any advertisements on TV because they don't want the normal people. Normal people will not be able to afford it, right? So they want the high class people. They automatically comes. So the customer selection. The first I have to select which customer target, who is the target customer. Then customer acquisition. For example, if I'm some FMCG course is there, I am acquiring the customer based on the advertisements in television. And then customer retention. I'm keeping them by providing buy one get one free in some offers I will get, right? So I'm going to retain the customer. Even and this again strategy is followed by Reliance Trends, right? You will get a voucher, right? You will get, if you purchase for some 2,000, 3,000, you will get a voucher, right? That voucher will be valid in the next month, will not now. So you have to come again. That way they are retaining their customers and customer extension. See, sometimes they used to give in the medical shops. If you find, you will find what to say? They will also have some kids chocolates and something, right? So that is known as customer exchange by cross-selling the products. Okay. Then the use of, because they buy something for the child, okay, they will say you could also buy chocolates, then they will not feel the taste of the medicine. And the parents usually buy it, right? That's how they extend their customer base. Okay. The use of information technology in downstream supply chain management. In managing the downstream supply chain, the organization link their sales system to the purchasing system of their customer through electronic data change. Using e-business to sell the products, intelligence gathering is used to monitor the online customer transactions. Like for example, if you search something on Google, okay, you will find all the ads, right? You would have experienced this. That's because of the intelligence gathering, and also some emails will be there for you. And if you search for something, some products on Instagram, then the particular email comes to you, right? Those all are use of information technology. Then brand strategy. Special branding of the product makes a huge difference in its appeal to the customer. See, now we have a good image about Tata brand, right? Because it has been quite trustworthy for a long period of time. They have proven themselves over a long period of time. That's known as brand strategy. Gain sharing arrangement. Gain sharing arrangement is an approach. See, there is a question is there for gain sharing arrangement. If you don't know about it, please check that question. It's important question because one or two questions is there for that particular topic itself. Okay, and even if you are not going to check it, but please memorize this definition. Okay, this is because if you write this definition, it's 1 mark out of, see, instead of getting 0.5, it's better to get 1 or 1.5, right, out of 4 marks. Gain sharing is an approach to review the adjustment of an existing contract or a series of contracts where the adjustment provides benefit to the both parties. Okay, I am going to review, and if I have gained anything extras, I am going to share with the other person, or together we are going to gain some more, and we are going to split among us in some ratios. And then outsourcing. Outsourcing is a business practice used by the companies to reduce the cost or improve the efficiency by shifting the task, operation, jobs or processes to another party for a span of time. It's very simple. We have the decision making chapter also, right? Whether to buy or outsource. Nothing but I'm not able to produce. In-house production is not available for me, or in-house production is costly. Then I will switch to external suppliers. But here the main, whenever you write this point, you have to mention, please pay attention, okay? You have to mention that quality will, there is a high chance of the compromise in the quality, okay? See, I may be providing a quality, okay? I could have entered with my this outsourcing party. I have to give me a quality, but there is no particular guarantee that they will be giving me same quality, right? So the quality of my final good could be affected. My final product will be compromised. Okay, so with this we have completed the biggest chapter of the modern business environment in as quick as possible. So if you really find this video, please do hit the like button, please. Okay, and share with your friends. Thank you so much.